Albert Einstein once called compound interest the eighth wonder of the world, saying, "He who understands it earns it. He who doesn't pays it." Investing in the stock market can seem overwhelming, but it's a powerful tool for growing your wealth over time. Let's break down what you need to know from top dividend stocks. Welcome to Trimble Dividends. I'm Ian Trimble. If you're new here, welcome and think about subscribing. Today, we're diving into the world of dividends, a beginner's guide to building a strong, profitable portfolio. Whether you're new to investing or looking to enhance your strategy, you're in the right place. First things first, what are dividends? In simple terms, dividends are payments made by a corporation to its shareholders. It's your share of the company's profit paid out regularly, usually quarterly. Today, we're highlighting 3 dividend stocks that are great for beginners: VOO, JEPI, and SHCD. Using the Robinhood app, you can easily start investing in these options with just a few taps. I will leave my link to Robinhood in the description below. VOO tracks the S&P 500, offering exposure to 500 of the largest U.S. companies. JEPI and SHCD, on the other hand, focus on high dividend yield, perfect for those looking to generate steady income. Why consider these stocks? Well, let's talk about historical returns. While past performance isn't always indicative of future results, these stocks have shown promising growth and dividends. Investing is a marathon, not a sprint. The slow and steady nature of dividend investing can lead to substantial growth over time. Understanding the market is key. In a bull market, prices are rising, signaling investor confidence. In a bear market, prices are falling, often causing panic. But here's where strategy comes into play. One effective strategy is dollar cost averaging. This means investing a fixed amount regularly, regardless of the stock price, reducing the impact of volatility. As of 2024, we are in a bull market with the S&P hitting record highs at the time of this recording. This environment can provide a unique opportunity for investors to potentially benefit from continued market growth. Now, let's take a moment to reflect on some wisdom from the greats. Warren Buffett once said, "If you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes." Investing is about patience and persistence. Charlie Munger and Peter Schiff also offer valuable insights. Peter Schiff says, "There are always opportunities in any kind of market for the patient, diligent investor who demands value." Charlie Munger, one of the all-time greats, says this: "The big money is not in buying and selling, but in the waiting. Remember, it's not about timing the market, but time in the market that counts." Dividend investing is a powerful strategy for beginners looking to build a strong, resilient portfolio. With the right approach, anyone can start reaping the rewards of the stock market. As the great Albert Einstein once said, "He who understands compound interest earns it. He who doesn't pays it." When it comes to investing, truly understanding the immense power of compounding is key to long-term success. Dividends, quite simply, are your share of a company's profits paid directly to you as a part owner. They are usually reliable, steady streams of income that can compound substantially over months and years in the market. Many newer investors focus solely on stock appreciation, share prices going up, but dividends unlock a whole nother dimension of returns. Say we invested $10,000 equally into Donald's and Procter & Gamble. Over 25 years, if we reinvest these dividends to compound earnings, we'd have over $60,000 without spending another dollar. Here's an example of how investing $5 a day in VOO could grow over time. Investing $5 per day in VOO after 5 years at $5 per day would equal to $9,125 invested, assuming an average annual return of 8%. That $9,000 would grow to $12,634. After 10 years, you would have $18,250 invested with that 8% annual return, and it would grow to $32,000 $1,274. After 25 years, your investment and dividend returns would grow to an amazing $194,515. Investing is a long game that requires tuning out short-term noise. As Benjamin Graham wrote in The Intelligent Investor, the investor's chief problem and even his worst enemy is likely to be himself. Avoid reacting emotionally and stay the course. Graham believed in having patience and thinking long-term. As he puts it, investing isn't about beating others at their game, it's about controlling yourself at your own game. Timing the market is difficult, if not impossible.
We haven't the faintest idea what the stock market is going to do when it opens on Monday. We never have had. We have never made, Charlie and I don't think, in all the time we've worked together, and I don't think we've ever made a decision where either one of us has either said or been thinking we should buy or sell based on what the market is going to do.
No.
Or for that matter, on what the economy is going to do. We don't know. And
rather than obsessing over daily fluctuations, take Graham's advice. If you want to ensure long-term profitability, expand your horizon, understand cyclical swings, and emphasize disciplined investing. A key part of discipline is dollar cost averaging by investing fixed amounts over time. This smooths out volatility, allowing compound growth to work its magic. Dividend stocks align well with the patient, long-term view approach. As Graham noted, over the long term, the stock market news will be good. In the 20th century, the United States endured 2 world wars and other traumatic and expensive military conflicts, the Depression, a dozen or so recessions, and financial panics, oil shocks, a flu epidemic, and the resignation of a disgraced president. Yet the Dow rose from 66 to 11,497. Stay invested, tune out the noise, think long term, be patient. Follow these core principles from The Intelligent Investor, and your portfolio will reap the rewards. Thanks so much for learning with me today. Einstein was absolutely right. With dividends, time and compounding are on your side. Use them to secure your best financial future. We covered a lot of ground on dividend investing essentials. If you want even more guidance, be sure to subscribe and click the bell to get notified anytime I post a video. The more you understand compound interest, the more you can earn it. Until next time, stay motivated, dream big, and keep investing.